Welcome to this week's special presentation titled Dividend Investing for the Successful Investor. My name is Todd Shaffer, Manager of Research for VectorVest, and I'll be your presenter this evening. VectorVest supports a full range of approaches to trading the markets. The Successful Investor approach is all about finding high VST stocks with steadily rising price and earnings performance, a prudent to conservative approach. You may have noticed recently, with the changing economic landscape, the market has shifted, with growth stocks falling out of favor while value stocks have taken center stage. A simple change of focus to include greater dividend performance can help fill the performance gap for successful investors. Of course, this is not the first time we've considered these questions, and that's one of the things I cherish about the VectorVest service is the wealth of resources we've compiled over the years. One of those resources our founder, Dr. Bart DeLito, and his book, Stock Strategies and Common Sense. You can find it by going into the program and clicking on the Welcome tab. You'll find a link to download the current version of the book. And let's turn to Chapter 14, to a chapter titled America's Safest Growth and Income Stocks. Bull markets do not last forever. As the market changes with the economic cycle, investors constantly adjust their focus on how the primary forces of earnings, interest rates, and inflation affect stock prices. When favorable interest rates and inflation turn sour, investors tend to dump growth stocks and buy value stocks with low but consistent earnings growth and dividends. And does that not sound familiar to our current market conditions? Scrolling lower, he continues, "The best of all worlds, collecting dividend checks while the prices of your stocks go up, comes from finding solid growth stocks that pay dividends. VectorVest is ideally suited to find these babies. VectorVest analyzes and ranks over 8,900, of course, over 9,000 U.S. stocks now, for value, safety, and timing, and gives a buy, sell, or hold rating on every stock every day. VectorVest's proprietary dividend analysis and retirement scans are of primary interest to investors seeking current income and long-term profits. Stocks with the highest YSG vector ratings are deemed to have the best combinations of dividend yield, safety, and growth." We can also combine VST and YSG analysis. Stocks with the highest VST vector have the best combinations of value, safety, and timing. Stocks with the highest YSG vector have the best combinations of dividend yield, safety, and growth. Stocks with the highest total VST vector plus YSG vector should give us the best of both worlds. Let's begin with who are successful investors? Well, hopefully our subscribers, but the real question is twofold. Because successful investing is a simple step-by-step system to buy and sell stocks. It was developed by our founder, Dr. DeLito, from VectorVest's very beginnings. And it's our coaching and curriculum where we teach the principles of the system in both a quick start course. If we come up to the training tab, we have the Successful Investing Quick Start course, and we also have a full-length, more in-depth course called the Successful Investor. And to learn about the full course, you can click the webcast at the bottom of the Quick Start course, or you can link to the VectorVest University to learn more about the course and our course offerings. But the coursework and the approach is the personification of our mantra: buy safe, undervalued stocks that are rising in price in a rising market. It's also easily executed using the strengths of the VectorVest analysis in just 10 minutes a night. So let's start by building context by giving a quick overview of the successful investor approach. And of course it starts, as do all of our approaches, with market timing. The first step in a trading system that indicates for us when to buy stocks, what stocks to buy, and when to sell. We put that information right up front on our home page because it's the first thing we want to consult. And so we see a market timing gauge at the top of the home page, which gives us daily guidance. And right below it, the color guard gadget gives us a little more context over the last 6 trading sessions. And we find the top performing stocks, industries, and sectors all on the home page. So when we have favorable guidance, the next step is to find the stocks that we want to trade. So the easiest solution is go to the Viewers tab, and let's look at the Stock Viewer, a giant spreadsheet of all 9,200 stocks that we're currently tracking in the U.S. database, and they're sorted by VST descending. VST is our core analysis where we look at the relative value of the stock, its upside potential, its relative safety, its consistency and predictability of financial performance, and its current price trend. We combine these mathematically into the VST vector or VST score to give us a balanced analysis of all the stocks in the database. And by force ranking them so that the highest score is at the top of the list, we bring to the top of the list the stocks that have the strongest combination of those three attributes. The next step in the process is to look at the graphs of these stocks because the charts are the DNA of the stock. We want to confirm that the price is steadily rising, driven by steadily rising earnings. So let's just graph these top 20. And let's set up our layout to the VectorVest simple layout. And we'll take off everything but price and earnings per share. And what we like to see on a 1-year time frame, we like to see price steadily improving, bottom left to upper right, smoother the better, driven by a rising earnings per share performance, bottom left to upper right, smoother the better. So we note the price hasn't just consistently gone up. It does have periods of consolidation. It does have fast appreciation and then slows a little bit. We see that there's much more volatility in the last third of the graph than there was in the first third. So volatility has increased. But all the while, even though the market had peaked in November, SJT has continued to improve price action, and it has continued to improve their earnings prospects by virtue of the rising earnings pattern. And there's a high correlation with that earnings pattern and sustainable trend. So as we flip through these graphs, we're not going to spend a lot of time. I just want you to take a look at the graphs and get an impression of whether or not you like the price pattern. And just that quickly, we looked at 20 graphs, and I'm guessing there were some that you liked more than others. For instance, Zim had quite a bit more volatility after this pullback. It is recovering, but a lot more volatility, bigger and broader swings in the price action than some of the other candidates. I noticed with SWN, the price is higher than it was a year ago, but it has not been very smooth and steady. And earnings performance, which includes our 12-month forecasts, have actually been falling. Finally, we also like to avoid on entry price action that's gone parabolic or has had a gap, because those overextensions of price often have a mean reversion, and we'd like to avoid that when we first take the position. And of course, when we take the position, we always want to define our exit, define our stop loss. Here, using the VectorVest stop price, I can now not only identify the level of stop, but I can also calculate the risk exposure so I can appropriately size the position. You may have also noticed that the majority of our prospects were from the petroleum industry as the markets become more focused in this market correction. And we certainly don't want to over-concentrate our portfolio in any one industry. So why did I go through that exercise of reviewing the successful investor approach? Well, that's because that forms the basis of our dividend approach we're going to talk about tonight. Successful investing is all about finding great stocks. And if those great stocks happen to pay a dividend, well, that's great, icing on the cake. But what if we put more focus or more emphasis on the dividend performance? If I scroll to the right, we'll find the dividend analysis that is performed in VectorVest every day on every stock in the database. That analysis begins with the dividend payment itself in the DIV column. So here we're reporting regular cash dividends. Special dividends generally aren't included. DY indicates the dividend yield, which is the dividend paid as a percentage of the stock's price. Dividend safety is a measure of the assurance that regular cash dividends will be declared and paid at current or higher rates for the foreseeable future. A major consideration for positive dividend safety, it's on a scale of 0 to 99 with 50 as the midpoint, we're looking for a dividend yield that is lower than an earnings yield as an indication that the company can afford to keep paying that dividend into the future. If the dividend yield is greater than the earnings yield, then the company has to borrow money to pay the dividend to keep their investors happy. Next, DG is dividend growth. It's the forecasted annual growth rate of a company's dividend based on historical dividend payments and dividend predictability. And when you think about it, it's also a reflection of the board's outlook on their ability to produce earnings into the future. And then finally, YSG, yield safety growth, uses the same vector approach to combine the analysis of the dividend yield, the dividend safety, and dividend growth into a single value that allows the direct comparison of all dividend-paying stocks in the database. And I happen to notice that these top VST stocks, many of them pay a dividend. Let's look and cherry pick the ones that have a dividend safety score above 50. And let's cull from that group any whose dividend growth is in negative territory. Next, I can also cherry pick for yield, and maybe I want to eliminate any of these candidates whose yield is less than 2%, for instance. And now I have a list of candidates. If I right-click, let's go back and review their graphs. But this time I'm going to modify my graph layout. I'm going to add a parameter, and under the dividend analysis, let's add the dividend to the graph. Over the past year, has the dividend been increasing? So now all these concepts are coming together. I'm looking for a stock whose price is appreciating on the capital side. That price improvement is supported by earnings, and the earnings is also supporting the payment of dividend and future dividends as earnings continues to improve. And let's take a look at our other candidates. We'll just quickly scroll through, and I can cherry pick from this list my favorite candidates. And remember, we're going to manage the trade as a stock trade to protect your capital, because one of the pitfalls of dividend investing is holding on to large capital losses in pursuit of a single-digit dividend yield. So use loose stops to give the stock more breathing room, but remember to size the position appropriately for the increased amount of risk of the loose stop. Another very effective sort for the stock viewer would be to change our sort from VST descending to VST plus YSG, the combination of stock performance and dividend performance. That'll bring the strongest combination to the top of the list. And again, we might cherry pick from here those that have safety scores above 50. And again, do our cherry picking analysis as we did before. But of course, we also have the Unisearch tool available to us to help us do this cherry picking. In the Unisearch tool, if we scroll down, there are primarily two places where we house most of the dividend paying or retirement strategies. First is in the conservative group, the searches conservative group, and then also the searches retirement group. In the conservative group, you'll see some recurring themes. Let's look at discounted dividend payers. It's right in the name that we're looking for dividend paying stocks. This is more of a turnaround kind of approach, but look, we're looking for stocks that have a dividend yield greater than 2%. Dividend payers. Looking for VST stocks that pay a dividend. Dividend plays. Now we're getting a little more complex. Our VST plus YSG sort. Growth rate greater than 11%, a dividend yield greater than 3%. They're in uptrends by virtue of their buy rating. Pale Blue Chips uses our VST plus YSG sort, but also specifies data point thresholds where RS has to be greater than 1.25, earnings growth rate greater than 10, dividend safety score above 50, dividend growth above 10%, and a yield more than 1%. And so you'll see these themes repeating in many of these searches. Coming down to the searches retirement group. If we open the group, Blue Chip Bonanza is our top. Here we're sorting by YSG. And of course, looking at a watch list for blue chip stocks, blue chip dividend payers. Sorting by earnings growth rate combined with dividend growth. We're limiting the search to the Dow Jones components and the S&P 500, stocks that are yielding 3% or greater. Here we're pointing to some of our dividend watch lists. In this case, dividend reinvestment plans with stocks that have had growing dividend yields for 10 to 24 years and 25 plus years, and have dividend safety scores above 50. Here's one with the VST plus YSG sort. The parameters make sure that VST and YSG are both above 1. RS scores relative safety above 1.25. Stock growth rate, earnings growth rate greater than 10%. Again, though, using the successful investor approach, if we run that search, a quick double check of the VectorVest analysis, strong RV and RS scores, positive earnings with double-digit earnings growth rates, scrolling over to our dividend analysis, dividend safety scores well above 50, and sometimes when we get these high dividend safety scores, the yields can be a little bit lower. But again, we can cherry pick the dividend yield above our minimum. But no matter how you generate the list of candidates, we fall back to our successful investing approach where we take a look at their graphs and confirm rising price pattern driven by rising earnings and a rising dividend. As dividend investors, the three main pitfalls we want to avoid are: number one, a falling stock price. Often we get so focused on capturing the dividend that we forget to protect the capital side of the trade, and we end up having large capital losses in pursuit of a single digit or a relatively small yield. Also beware of declining earnings. First of all, earnings are the primary driver of price trend, but also now are impacting dividend safety. Declining earnings may put that dividend payment in jeopardy. And then finally, market corrections. Price can get away from us when we're in a bear market sell-off. In all these situations, VectorVest analysis is our best defense against the dark forces. And by the way, options can provide additional protections against some of these forces. If you'd like to learn more about how to use options to protect your portfolio, we have a course, Retirement Portfolio Transformation, which includes not only dividend investing, but using those option trades to protect your portfolio. Of course, we also have our Successful Investing course, which will help us find and analyze stocks. And I also want to share an excellent presentation that Steve Chappell did back in May of 2021, Hunting for High Dividend Yield the Right Way. A special presentation available to you in the university, and of course, our ebook from Dr. DeLito, Stock Strategies and Common Sense. And so this is how the successful investor collects dividend checks while the prices of our stocks continue to go up. It comes from finding solid growth stocks that pay dividends, and VectorVest is ideally suited to find them.